So in this video, we're going to talk about Quantum C. And as of last couple of weeks and months, anything quantum related has been bid up. And Quantum C is another example. You can see how price did gap up on the 19th of November. And it's just pretty much been making higher highs and higher lows. However, price is off recent highs. However, there's a reason for that. They are selling stock for the betterment of the company. But that stock sale is going to be selling at a discount to what was recent highs at $5.50. So let's get into the news. Then we'll get back onto the charts. We'll look at potential targets and where Quantum C can go from current levels. So shares plummeted 20% post-market trading following the announcement of a registered direct offering. And what is a registered direct offering? It involves the selling of shares. In this case, Quantum C shares will be selling approximately $50 million worth in gross proceeds, which will be allocated towards working capital and other general corporate purposes, really to fund operations moving forward. And another 50 million gross is equivalent to about 11 million shares. And so that's going to increase the outstanding shares from 123 million shares to about 134 million shares. They do have a public float of roughly 97 million, and that float to outstanding shares ratio is pretty high, but that's a good thing. That just means that the stock is very liquid. On the news, again, the price dropped 20% on decent volume, as you can see from the volume bar, right? Very, very much decent volume, to the tune of roughly 2.7 million shares changing hands. Now, why did it drop? Well, not only are they going to increase the available shares, which is going to dilute any future earnings, but the price set for the offering is selling at a discount, roughly 25%, which will likely contribute to a small decline, sharp decline in shares values, right? So, nevertheless, one thing I want to point out to you, conservative investors, they could have gotten long on the breakout and the retest. This is what we would call a daily buy level at about $1.25. But if you're still with me this long, you're not interested in what price did. Your question is what is price going to do? All right, so let's scroll out to the weekly chart. We'll start with the monthly chart. And the fact that price is in this monthly sell level should cause some hesitations for anyone looking to go long. Your next level of interest is going to be at $11. But let's deal with current price, which is at $4.29. Let's go to the weekly chart. And I'm just going to take this arrow off. So as you can see from the RSI, price is at 80 which is overbought territory. Looking at current pricing going to the left, I don't really see any levels of interest. You do have a pivot low, and that's where price hit and then retraced. All right, let's go down to the daily chart once again. So why did price pull back? A couple of reasons. You're in this big monthly sell level. You have traders taking some off the table from their gains for the week. You do have some, negative news short term, and that shareholder value is going to get diluted. But the positive of that is that they'll have more funding to fund their operations moving forward. And so if you can get closes above $5.50, your next level of entry is going to be at $8. Now, how would we get long? Let's go down to the 4-hour chart. If you go to the 4-hour chart, you have this nice gap. Which took out the pivot high to the left, so that's a nice 4-hour buy level. Now, I'm not assuming that price is going to retrace this move 100%. If the 50% mark is about here, that would be roughly a 70% retracement. So 66.8, 70, close enough. That'll be a good level to go long on high volume. But I would love to see price take out this level first. Right? It opens the door for prices to move higher in the medium term. Thanks for watching. Subscribe. Please like the video.